I'm Kostis Tselenis. I'm a senior investment professional with a focus on sustainability and impact investing. I'm working with Quadia, a pioneer investment manager with a focus of allocating private and institutional wealth into impact strategies. Yeah, in principle, Quadia is a pioneer investment manager that focuses only on impact investing. The priority is to allocate as much institutional and private capital into impact strategies. We have some preferences, some priorities, but the main goal is to invest in private equity deals and funds. We have a mix of both, with a very clear environmental and social footprint. Generally, impact or non-impact, I feel that good investment opportunities or good investment portfolio companies can only progress with an active approach, a hands-on approach from the investors that are involved. It's very important to have that high degree of involvement, especially if the venture is in the growth phase. I don't believe in passive investor money for this category. On the impact side, this kind of activity is probably even more necessary, as we all know that the scale is still not there. We all know that the funds is a little bit more difficult to find. It's a new methodology. It's actually an old methodology that has been reinvented, but until we convince the capital providers, it's going to take a while. So an active involvement in the funds, even the funds, not only the direct investments that we do, is necessary. And to the degree that is possible, of course, to the degree that my time allows, of course, I would do as much as I can. So the portfolio is a mix of direct investments and investments in funds, as I mentioned before. It is mostly private equity, this is clear, and private debt to a certain degree. It focuses on various themes. So in the portfolio, we have anything from renewable energy infrastructure to reforestation, SME lending, developing world. It's very diverse, it's very colorful. We have our priorities, as I said before. If I take the assets under management, I feel that it's mostly in renewable energy infrastructure and clean technologies. On the private equity deals, it's usually anything from 2 to 5, 6 million, either at the beginning or over time. The fund investments as well, I would say, I would start with 3, 4 million, and then depending if it's an open-ended fund or if it's a closed-end structure, if there's a possibility to scale up the exposure in the fund, then that is welcome, as long as my clients have interest to go ahead. We did a couple of deals in the early days that are a little more on the early venture capital space, therefore the tickets were respective. In exceptional cases, I would look at such deals that have a lot of potential to take more money in the future, therefore my work would then worth putting in at the beginning. I think that it links definitely to the expertise of the people. We're a small team. The areas that we feel very comfortable in covering, we know about technologies, we know about geographies, specific geographies. We cannot know everything. This is the magic and the challenge in impact investing, if you wish. It's a methodology that applies to anything, in any asset class, any maturity. It applies to different geographies, jurisdictions. Therefore, practically, you can do anything with impact investing. But the challenge is, again, how do I cover the expertise that's necessary? Therefore, the focus right now is renewable energy, infrastructure, clean technologies, which includes also energy efficiency, sustainable food and agriculture. It's a very broad definition, so we are including several business models that belong to that broader definition. I would say we would look at investments that contribute to a regenerative economy overall. If we understand the business model, we have good business partners, if we have good co-investors, that we can share that knowledge and bring the company forward, that's the case. On the fund investment side, I would cover all the other themes and geographies globally. Per definition, because the portfolio is right now mostly into renewable energy infrastructure and clean tech, of course, the environmental impact is very strong, if you would assess it. But we have touched on several impact themes. Therefore, I feel that the social component is strong as well. If you know the different goals that we are fulfilling with on the impact side, that's clear. I can pick one of our largest investments in the portfolio, which is Aventron. It's a small-scale hydro, solar, and wind operator in Switzerland. It's a Swiss company that is active in most European countries. A fantastic strategy, very low risk profile, extremely high environmental impact. That integrates social components as well, since we're talking about a small-scale renewable energy generation. And I think this was one of the reasons why we didn't do for the large-scale solar projects or the large-scale wind projects as other impact investors would do. So this is one example, and I'm going to take maybe another, which is another extreme compared to the company that I just mentioned. Venture South International, an SME lending platform in Colombia, Philippines, and Kenya since recently, with extremely successful track record and very, very low default rates on the underlying portfolio. This is, for me, one of the companies that has proven over 10 years that the risk perception for developing world investments is in many cases distorted. If you have the right entrepreneurs that know their markets locally, then the risk is very relative. And I'm going to compare that to the SME lending default rate of France, for example, a developed country in Europe, which is the sixfold of what the default rate on the underlying loan portfolio of my investee had at the end of the day. And the third, maybe also to add a little bit of color on the conservation side, is an investment that we have in Panama that does reforestation. And there is a clear combination, to answer your question, of environmental, but very, very strong social criteria as we're integrating local populations that are working on the field for the reforestation activities. We have a fantastic forest manager there that we're very happy for. So those are the direct side. On the fund side, a lot of examples. We have invested in funds that are very well known to other impact investors as well, and some new entries that are very promising. So it's very interesting portfolio there as well.
And very active, as I hear.
Yeah, we try as much. As I said before, you need to. First of all, you need to be on top of what these entrepreneurs or the fund managers are doing, so that you can help them avoid pitfalls and mistakes, in principle. Switzerland is a sustainability and impact investing hub already, if I compare to other European countries and the US. The US is forefront, absolutely, but I feel that we had an amazing development over the last 10 years in Switzerland. Both on the capital provider side, there is great knowledge and education on sustainability issues with high net worth individuals, families, but also institutionals like pension funds and insurances. And on the other side, we have excellent fund managers that are located in Switzerland, but also entrepreneurs that we see more and more innovative ventures in Switzerland that are aligned to environmental and social criteria. So a great place to be if you're in this business, from whatever side you're acting. What I see in the future is the banks starting playing a more active role in impact investing. I feel that this is a trend that has started recently. We have already a couple of successful examples with banks launching impact investing offering activities. I know that a lot of the other banks that don't have the offering are discussing about launching one. And this is a result of the pressure that the banks have from their private and institutional clients. So I think that this is going to be, this can be a game changer for impact investing going forward, as we know that there's a lot concentration of capital. Banks are the intermediaries that can help this process, that can allow for more funds to be allocated into these strategies.
A good time to be in impact.
Yes, I feel it is. We heard that a couple of times in the past, in the last 15 years, but I think that now we have the first signs that not only people are talking about it, but we're actually seeing the fund flow more and more. So I think it's a great time to be an impact entrepreneur. I think it's a great time to be an impact fund manager. And hopefully in the future it's going to be great for the people that have provided the capital in terms of return, financial and social. So we'll see.